Alright, what up guys? We're going to be back testing here, reviewing price action for today. Hopefully y'all are doing good. As usual, today is January 12th, 2026. We're going to take a look at what happened. There's actually a lot that was interesting today that I'm going to take a look at. We're going to take a look at. A lot of interesting stuff today, so I just barely made the folder for today. Biggest thing being that, well, actually there's two biggest things, right? London made low of the day with a previous day low SMT. This was huge. This was a huge factor in me identifying that the market was likely going to continue to the upside in New York. So if I actually drag this out, we're going to ignore all of this for now. And I'm going to actually move this out of the way for now. Right, just take a look at what happens in London because it's going to tell you a lot. So we have in London a low of day formed, and we might have even had a. Let's actually pull this up here. Let's look at ES and we'll look at YM here. So we have a low of day form. Hey, what up, Kirk? Good to see you, bro. So this was a dead giveaway for daily profiles. Even when we were earlier in the morning, like 7 a.m., 8 a.m., I don't know when, I knew that we were going to drop to Asia because very clearly London made low of the day. And the way I could identify that was true opens. You can see we have a SMT with previous day's low. So there's previous day's low. And then look at this. We have London session right here. Right? London goes below 130, goes below 90-minute true open, goes below midnight. We get previous day low SMT. And then this is just a massive breaker block by the time we get back up here. So, all that's going on in my head. I'm going to take a screenshot of this real quick. It would be nice if I had a higher time frame key level, but I honestly didn't see one. So, I am just going to mark it out like this, right? So, we have London from 2. Whoops. 2 until 5. London. Essentially, what is London doing here? It's creating the Judas swing for the day. That's what happened. So I'm going to pull up London. Boom. Right? This is a London Judas swing. So what is this? Right here. This is the breaker. Okay. So London makes low of the day. What daily profile manipulating all the true opens with previous day's low SMT? This was running through my mind. This was running through my mind at 8 a.m., 9 a.m. when I got on the charts, right? This was running through my mind. What daily profile does this hit? London reversal, New York continuation, right? London makes low of the day, New York's likely to continue. And then this is a high probability breaker. And then I'll show you how I use that. Well, I guess this whole entire area is this whole entire up move is a high probability breaker. Okay. Let's go ahead and screenshot this. So you can kind of start to see the logic that I had here with being bullish going into market open was London made low of the day with previous day S&T. Previous day low S&T. Hey, what up, Uba? How's it going, man? We are just reviewing the day. So, if London makes a low, and actually I would like to see if there was a higher time frame key level. There probably was. So let's go ahead and look around. What model are you using to trade on MNQ? I guess I'm on MNQ. It's just because I already had all the stuff marked out on MNQ. But NQ and MNQ, basically the same thing. I trade NQ futures. And I trade ICT. I trade accumulation, manipulation, distribution, and then whatever entry model to get on side with that. Okay, so back to what I was saying. London makes low of the day down here. What daily profile does this hint? London reversal, New York continuation. So then what did I know to do, right? If this, I wanted, actually, I was going to check to see if there was a key level. I feel like there should have been. Yeah, so I actually really like this 1 hour gap here. 1 hour, what is this? It's not just reclaimed, right? Because we've used it once, twice. This is the third time. So it's a 1 hour, not just a reclaimed gap, it's a supercharged gap. That's the nickname I gave it. I'm going to have to make a short form video on that because anytime I mention that, I don't even have a short form video to kind of explain it. But basically, if a gap gets used more than once, more than twice, I call it supercharged. That's the nickname I give it. Okay, let's move on from that. So point is, it's a reclaimed gap. So actually, I kind of like, this one's not super obvious. I kind of like using the other true open better. The other 22-minute true open. Where's the one before that? 328. Yeah, I like this a little better. It moves a lot more clear, like that this is creating the low. Okay. So, back to what I was saying. London makes the low. And then we can expect New York to continue. So I already screenshotted all this. Next, I'll show you guys what you do in this situation. So, in this situation, you guys may remember in my stream that I marked out this imbalance between this high and this low here. And the reason I did this is very specific, right? This, if you look at the hourly chart, right, go to the hourly, or the 15-minute actually, right, if we go to the 15-minute chart, and we can get rid of the true opens now, for now. So what's happening here? We have a move up, right? We have a move up before a larger move down. This is London low of day, and we noted this on stream. Once again, London makes low of the day, New York likely to continue. We're gonna get rid of all this for now. So you're starting to see the logic that I had this morning. London low day. New York likely to continue. Okay. From here, this is a breaker, right? This is a breaker because it is a series of up close candles before this final move down with SMT. So this series of up close candles is a breaker. So what is the imbalance I have marked out here? That's a Reaper fair value gap because it's a fair value gap and discount of the breaker. So here is that breaker. Right? And then here's that Reaper for value gap. And then what do you notice happens here, right? The market perfectly respects this. I had this marked out on my chart. You guys go watch the stream back. Go watch the stream back because I was watching this Reaper gap from the very beginning, right? And actually, I kind of want to mark it out using my other tool for it. So here's that Reaper for value gap. Once again, one of the best confluences in the entire market. I have no clue why other people do not use it, but that's not for me to understand. I just take trades and I trade the way that makes sense to me. So here we go. So with all of that in mind, here, let's actually make a little note. London made low of day, manipulating all true opens. Creating a valid 1 hour breaker. Because of all this, I knew New York was likely to continue. Once again, this is the most textbook daily profile that there is. If London makes the low of the day, New York's going to continue in that same direction. This is the most textbook one. Okay, let's go ahead and screenshot this one more time. So, very nice London. Low of the day, New York continuation. So, once again, I did have the bias right here. So then, what I do find very fascinating is, right, we still have this Reaper. This Reaper is still a thing. And we can, let's get rid of the other stuff here. This Reaper is still a thing on the 15 minute. Once again, this for value gap and discount. And then even, or this is the 5 minute actually. And then even on the 1 minute, I can eyeball it, right? I can say, okay, the gap between this high and this low. That's the Reaper gap, right? I don't even need to go on the high time frame to see this stuff, guys. Right? I literally just eyeball it. Boom. And then boom. Right? This ain't rocket science. I just look for, okay, I know this is a higher time frame breaker. I know this whole area is a higher time frame breaker. So I know that the imbalance in discount is going to be very sensitive. So So I know this imbalance in discount of this is going to be very sensitive. And you can see that. You can visually see how the market interacts with this. Once again, Reaper for value gap is one of the best confluences in the entire market. You'll see why I preach this stuff. So New York likely to continue. And then bang, it does, right? So this was the logic I had going into the day. Makes a ton of sense why it happened the way that it did. We're going to go ahead and make this big. And then we also had Asia high. Once again, Asia high was the draw on liquidity. All of this I had marked out, and I had the trade marked out. I was just a little too slow. Okay. Okay, so the trade that I really liked here was understanding that higher time frame context. We can drop down to a 5-minute chart, and we can look at this gap here. Let's actually redraw this here as the dark green one because I like it better. Dark green box. Once again, this is very obvious. This is on every single person's charts. Everyone can see this. This is not some random moving average. This is not some arbitrary like thing that everyone can see this exact same imbalance on their charts. This is objective. This is a high time frame breaker. I know if the breaker is likely to hold, we're gonna want to probably utilize the midpoint or right below the midpoint. So let's look for the imbalance right below the midpoint. That's the logic of Reaper for value gap. It's just understanding if I know this high time frame breaker is likely to hold, let's look for a lower time frame level that's going to provide a super precise sniper entry. So that's the logic. So bang. So Reaper for value gap. And then as well, remember, like I was saying, 5-minute for value gap. So what is this, guys? What is this? This is 5-minute for value gap. This is accumulation, manipulation, distribution. We can go actually pull up those other two assets again because I do want to go and look at those and look for SMTs. But there were like a ton of SMTs here. We'll get on the 30-second. And y'all can just kind of see like how nice this was here, clearly. We do have SMT with this low. Bang, right there. Right here. SMT with this low. And with this low, I think. Lots of SMTs. We even might have had SMT with this low. What on earth happened to YM? This is crazy. What? Okay, let's kind of ignore YM for a second. Because what? Yeah, so point is, lots of SMTs here. Bang. Bang. I just don't get how other people don't think this is cool. Like, the precision is crazy, guys. The precision is crazy. once again, saw all of this live. Let's go ahead and get rid of this. Yeah, we have essentially equal lows get swept as well. That's something else I did not realize in the moment, but dang, that's pretty sweet actually. Maybe I'll change this. With the occupacity, move it down. There you go. And look how perfectly we fill that. Bang. Okay, I don't need these other assets anymore. Let's get rid of them. So, with all this in mind, right, what do we get? And I had 2 opportunities to get in on this. I should have entered right here. I was slow. I should have entered, but whatever. Point is, we have a 5-minute fair value gap. We have multiple bullish SMTs, I'm pretty sure, actually. But just to keep things simple, right, I'm just going to mark it out as 1 bullish SMT. And then, what happens? Bang. 30-second change in state of delivery. I saw this all live. I did. I really did. And I was hesitant. I should not have been. It is kind of scary, but once we got this closure, so this one's a little iffy. This one, undeniable, right? So this one, yeah, I'm okay with not taking this, but upon this closure right here, this was undeniable, and right here, I that was where I had to go. That was undeniable. The market was gonna go higher at that point. And so that was my kind of mistake I made, honestly. That's okay though, right? Once again, all this being low resistance, massive accumulation, manipulation, distribution. We can take a look at true opens, right? So if you go over to midnight, we have midnight open over here. So this was kind of cool. Check this out. We had midnight perfectly taken, and then we had the 922 true open right here. We had 730 right here. So all the true opens just chilling, you know. So honestly, you don't really need to go much deeper than that. I think with just these 3 true opens, you get a pretty good idea of premium and discount. And then we go higher. Bang. And so you see how true opens help you identify the manipulation, right? Okay, bang. Let's get rid of this thing here. And then once again, where did I want to target with this? What was the logic behind this? I wanted to target Asia high. And then bang, where do we go? Asia high. And yeah, I would enter right here. You could have entered on the lower one. That one's fine too. But the safe bet is just entering on that candle right there. And then, oh man, so it gets tricky because, you know, with this one, you definitely could have got some crazy RR. But I most likely would have taken it like this. And then maybe stop loss. Probably stop loss like here. Like below that candle. And then boom up to Asia. That's 5R. That's the most likely version of the trade that would have came from my analysis. I'm just being realistic. Like, I know that theoretically I could have got the 7R if I took that one. I'm just being honest. I don't think I would have taken that. But I do think I would have taken this. 100%. I was so close to. I mean, the only reason I didn't was just I hesitated. But yeah, bang. Once again, true opens, very important. And then we go run up to Asia high. Make this blue. Wow. It's pretty cool, guys. Five-minute line with the 30-second. Yeah. Once again, you could have taken it from the lower one. Nothing wrong with that. Just means you had a little more conviction. Which, once again, is totally valid. And then now, all of a sudden, if you took the lower one, now you got a 7R version of the same exact trade. So let's go ahead and screenshot that one as well. Boom. Okay, 9:28 flow state, 5-minute line with the 30-second, number 2. Hey Javier, what up, bro? Dude, this trade right here, I was this close from taking it. I just hesitated, and right when we got this candle, this was literally like the market's golden signal. I had to enter right there. I know, bro. I know. I said it from the very beginning. I said Asia high is the draw on liquidity. Why? Logically, why is Asia high the draw on liquidity? Because London made low of the day, right? If London makes low of the day, what's the number one daily profile? London makes low of the day, New York goes the same direction, right? So London makes low of the day, New York continues. And why else did I think that was going to continue? Because we validated this as a higher time frame breaker block. Like if I go to the hourly chart here, I mean, you can clearly see that this was just a 1 hour breaker block right here, right? You can clearly see that this was a 1 hour breaker, a 1 hour change in state. 1 hour breaker. Super obvious. So why did I like this Reaper fair value gap? Because it's the fair value gap in discount of that 1 hour breaker. See how it's all super logical, right? So this is a very sensitive area. I called this. I also somewhat called the shorts. It was that Khufu stack thing that I talked about, where basically it's like a train, right? You're getting on every single stop along the train. The market will go from the rejection block to the fair value gap to the breaker. And I'll show you what I mean actually right now. So this one was cool too. So this was a short, and the reason you could have conviction in this short was because you're looking for a specific thing to deliver price, which in this case was market open, right? So maybe if you weren't expecting the move to happen until market open, then you could take something like this. But the cool thing about this is we had a bearish SMT with London high, right? Then we have another bearish SMT with this high. So now all of a sudden we got stacked bearish SMTs. Stacked bearish SMTs here. Bang, bang. So I'm pretty sure this is with ES. Honestly, I don't really care a ton. I don't think it matters a ton, but we should probably look. Nah, I don't care. I know there was SMT there. So, stacked SMTs. So, within this one rejection block, this has got a high time from SMT and a low time from SMT. Pretty crazy. So this rejection block is the one that I like right here. Eyes go to this rejection block. Why? Because it came with SMT and it took out all these highs. So I love to see rejection blocks that take out highs, because those ones actually mean something to me, right? So we have bearish SMT here. Honestly, for the sake of simplicity, maybe let's just call it SMT with bearish SMT with ES. Yeah, it was bearish SMT with ES. It was 2 bearish SMTs with ES. Okay, perfect. Awesome. And then what, right? Rejection block. This was beautiful. This was like about as textbook as it gets. Like straight from... Yeah, I'm going to be talking about this in the market recap. And we got an outside bar on the 5-minute. Dang, really? Alright, I'm going to look at that outside bar next. That's sick. That is so sick. Yeah, so this is like basically when this is the textbook version of the stack, the Khufu stack that I like to call it, right? Where basically you'll get the Phoenix entry, then you get the 2022 model entry, and then you'll get the breaker entry. So check this out, right? Here's that Phoenix entry on that rejection block. This was... Yeah, right there. Then, displacement lower. Breaking this low. Once again, breaker structure is not the most important thing. The important thing is seeing that we had displacement. We did. Now I'm actually kind of curious because I'm pretty sure didn't we come up to that gap? Nah, now I'm confused. Wait, what? Wait, well, how does NQ look? Just hang on one second while I look around at this because I'm pretty sure... okay, nah. So, NQ actually did come up to that gap. And I guess MNQ did not come up to that gap. That's strange. That is strange. I'm not gonna lie. Usually they don't do that. Okay. Either way, this is the same exact thing. It doesn't really make a difference. So we have equilibrium get hit. This one hit equilibrium instead of the upper gap. It is interesting how there will be divergences in NQ and MNQ. And that's something that I do want to do research into, and I'm pretty sure the reasoning is they obviously have different order books, right? MNQ is gonna have a different order book than NQ. It will eventually, you know, arbitrage back to being as close to the same as possible, but that might not be instant, right? So you can see that didn't get this gap filled up here. Okay, so let's just do 14. Okay, so Phoenix, and here's the 2022 gap right here. And then here's right here. I like the let's see. I like that breaker and then fair value gap. And this is a fair value gap on NQ. So it's kind of not obvious here, but it is a fair value gap on NQ. So maybe I should be charting this on NQ, but it honestly doesn't matter too much, honestly. Okay. So this is, instead of a regular fair value gap, this is an implied fair value gap. Same thing though. But it is crazy though, the way the market does this. Okay. You know, I do want to look at new day opening gaps and just see if there were any. Then here's 752 as well. So here's the true open that I was talking about. This is why I like 90-minute true opens. You see how this is helpful to identifying that? I actually kind of like that smaller text. So yeah. Pretty sick, honestly. And I think this is the breaker that makes the most sense because this breaker is the breaker before this move up. So, and then where would you take profit? These equal lows. I mean, once again, not necessarily, this isn't a realistic trade. I'm not saying it is. I just like observing stuff, and I do think it's super fascinating. What's the SMT indicator you got? It's called what's it called? Ouroboros SMT indicator. And yeah, I am paying for it, but it's really good. So y'all see what I'm saying now, guys? I mean, this is on MNQ, so this fair value gap, you're like probably like, that's not a fair value gap. It is there on NQ. But you see what I'm saying? Phoenix entry, 2022 entry, breaker. Ouroboros. SMT by Ouroboros. You can pause that if you want. Ouroboros. So yeah, this was nice. I think it's better seen on NASDAQ, not MNQ, but it's whatever. I'm not going to redraw it out. I'm done. I'm not drawing this out again. Yeah, I'm glad. Hopefully that's helpful. I'm not drawing this out again, guys. I know that it'll make more sense if I drew it out on NQ, but I'm not going to. And I already drew this out, so. So 856. Kufu stack. And this is on the 1 minute chart. And the other cool thing about this is, you can just take this as a Phoenix. You don't need to do all this other stuff. I think the Phoenix itself kind of speaks for itself, right? I don't really need to even look at anything else. I can just say, okay, right? This Phoenix, it's above all the true opens, right? It's about as simple as a Phoenix model as it gets. And then we can project out the rejection block. Now, once again, it's not like this isn't scary, because it is. Wow, perfectly 8 projections. I would target 7. Bang. And then you can TP actually at that low. Once again, insane. And once again, pairing your entry with an inducement with a true open. Kind of cool how that works, huh? Bang. So that is kind of like, this is basically the textbook for highest probability Phoenix entry. You're gonna get the best ones when there's SMTs, the rejection block perfectly aligns with the true open, and then it also aligns with an inducement, and the rejection block takes liquidity. I mean, this has just got everything good about a Phoenix model, this thing has. So that's what I like about this. And yeah, this goes 7R. Whoops. I'm gonna get rid of this. And then we'll look at something else. I think there, like Javier says, there was a 5-minute outside bar. So we'll look at that next. Oops. Okay, 8:56 Phoenix. What, on the 1 minute, right? Yep, on the 1 minute. Okay, let's go ahead and see if there was an outside bar. Yeah, everything about today was super logical. It made a ton of sense why we need to go down and then why we need to go up. Like every little, you could have caught the shorts and the longs. Okay. What'd you say? 5-minute outside bar. Javier says 5-minute outside bar. Let's look at the 5-minute. And I actually, you know what? We're going to switch to NQ because MNQ is kind of being a little bit of a pain. So I'm going to look at NQ instead. And yeah, that is just a magnificent outside bar. Wow. Wow, look at that. That almost just... That makes your mouth water. I'm not going to lie. That is insane. Wow. I wonder, do we have anything else? Like new day opening gaps or anything? I gotta check. Nothing incredible, but I do love that Reaper gap. And I think, honestly, getting this outside bar off of the Reaper gap is one of the best trades I've ever seen. I'm not even gonna lie, guys. Just insane. There we go. Bang. Bang. Yeah, you really could have, huh? That's the cool thing about outside bars is once you get the outside bar, you're basically good to put a limit order in at that old spot. Same with an inversion for value gap, right? If you see an old IFG, put your limit order at the close of that IFG. That's an easy way to still get in. So yeah, there we go. The cool thing about an outside bar is the one end of it is always going to be a sweep. And then the other end of it is always going to be a the entry. Or yeah, whatever. Yeah, and then I would project this out, and I would go from here to here. 1, 2, 3, 4 projections. And you could have gone 8 projections. Or, honestly, you could just target Asia High. Dude, there's a million ways you could take this, but I think Asia High, actually, now that I think about it, most reasonable place to target. Where's Asia? Depends how much RR that is. Yeah, dang. Yeah, that 5-minute outside bar was magnificent, guys. I mean, it doesn't get easier than that. Once again, you kind of have to see it though, but that is a very easy trade. That's the kind of trades we want to be taking, because why would you make it harder than it needs to be? It doesn't need to be that hard. If you see something like this, go ahead and take it, you know. So yeah, Asia, and then obviously you could have held it up for 4 projections. The other thing that's nice about this is you know it's market open, so you know market open is going to do its thing. Let's project this out again. The cool thing is with outside bars, you can project it from the close to the low of the candle prior to the outside bar, or from the high to the low of the candle of the outside bar. How much is your TradingView subscription? So that's a that's a good question, because I should actually be concerned, because honestly, I always get it on Black Friday, and I didn't get it on Black Friday this year, so I might be cooked. Because I was supposed to get it again on Black Friday, and I didn't. But when it's Black Friday, it's just usually a really good deal. So what I recommend is, if you want a TradingView subscription, get it on Black Friday. I don't know how much it was, honestly, but it's not super cheap, but it was worth it for me at the time, because I just got it all at once, because I know I just like trading a lot. But yeah, but I might be a little cooked, because that thing is gonna expire. It's okay. Beautiful, just beautiful. And then we go for projections. Okay, let's go ahead and screenshot that. As well, we're delivering from that fair value gap. That's just kind of like common sense. Okay. So what time was this at? 9:30. Outside bar on the 5-minute. Bang. Yeah. Wow. It really is nice, huh? Look at that. Look at that 1-minute change in state right there. Tell me you see that 1-minute change in state and we don't go run up to those highs. It's crazy. Okay, what else do we look at? I mean, basically I've looked at almost all the opportunities that I would have had during the market, because anything prior to this was obviously in London session or pre-New York session. Like I like to call that Atlantic session. And then anything over here is just kind of meh price action, and you know, I hate trading after a giant expansion. That is kind of why I got off the chart, actually. What is this? Yeah, this is giving data wick vibes. So this was probably the drawn liquidity. This must have been a... Do you journal your trades or backtest? Both. I do both. Yeah, this is giving data wick vibes. And that's so fascinating. We actually... So many people were taking profit at this data wick that it actually didn't get all the orders filled at that data wick. In a situation like this, guys, this is where it's like beneficial to just take profit at the body of the data wick, like that. I think this is a data wick, right? It's got to be some kind of data wick. It's the new the right at the open of the new week. For all my purposes, I'm considering this a data wick. Right? Anytime I see something like that, like a little spike like that, I consider that data wick. Even if it's not like perfectly one. Obviously, there was some event that came out over the weekend that caused that spike, right? Just kind of use logic here. And then, bang, we go up to that. So here's my Reaper Abyss model. This thing is sick. So basically what you do here is you take the Reaper gap, you know it's going to be sensitive, just wait for a change in state off the Reaper for value gap. This is about the easiest it gets when it comes to trading. If you just go, okay, here's the Reaper for value gap, I know we're going to react off of it, okay, I'm going to wait for a change in state or an inversion for value gap off of it, and then bang. We go up to where? Data wick. Bang. Just like that. There you go. I mean, like I said, I'm assuming it's data wick. Let's actually mark it out like this. Bang. Nah, it's fine. Sorry, I gotta blow my, not blow my nose, sneeze. Dude, am I gonna sneeze? I guess I'm not gonna sneeze. Never mind, false alarm. Might actually just rename it to just the Abyss model because I don't know. I don't like extra words. It's not necessary. Alright, what happens next? So after we get this expansion move, we kind of chill out a little bit, but drawn liquidity is still higher. And something I did notice that I kind of liked is, you know, when it comes to the market expanding really aggressively in one direction, yo, Jake, go to the 4 hour at 2 a.m. We got a nice pin bar. Those we can go in at the close, so at 6 a.m. Oh, yeah. Yeah, that was nice, actually. Yeah, I would, like I said, I think pin bars on the close. I don't see anything wrong with pin bars on the close. I know FA said not to, but given it's the right context and it makes sense in the context, I think you can take a pin bar on the close. So let's just mark this one out, right? The cool thing about this one as well is it did come with previous day's low SMT. So right here, previous day low SMT, bang, bang, and then we have that 4-hour pin bar. So consider that pin bar, CRT, whatever. No drawdown. Crazy. So 4-hour pin bar. I would also consider this my Genesis model. It's like the same thing, but whatever. Pin bar on the close or Genesis model. It doesn't really matter. And then I would target the CRT high like that. Whoo! Nice little 3.70 right there. Clean as heck. So there you go. The rest is history. Once again, if the context makes sense from my backtesting, I will enter a pin bar on the close. It's just about the context. The other cool thing is, oh, never mind. I was gonna say we might have been delivering from some kind of new day opening gap. Wait, were we? I don't know. It's not worth it. So this was like at 6 a.m. Six o'clock pin bar on the 4-hour. No drawdown. Bang. Actually gonna change the name of that Reaper Abyss model to just Abyss. Alright. Renaming that. Okay. I do kind of want to rechart out that stack because I want to show it on NQ because it makes more sense on NQ. Okay, I'm gonna do it really quickly because it is my stream and I can do what I want. So hopefully this doesn't take too long. Because I'm gonna talk about this on my stream or on the market recap. Once again, Phoenix entry. Y'all see it yet, right? Phoenix entry, 2022 entry. So see what I mean? Now it makes more sense. Now you can see there's a fair value gap that's at OTE of the displacement very clearly. This is why I wanted to do this on NQ. And then breaker and fair value gap. So now hopefully this makes more sense. Okay. Bang. So now, all of a sudden, this looks very obvious. You guys see it? It's so fluid. It's so beautiful. And is this a specific low? I don't even know. But, okay, wait. Back to this. Set once again, 752. True open. And now, the pieces of the puzzle fall together. And then here's the OTE of the displacement. You see why I wanted to do this on NQ instead of MNQ. It just makes a lot more sense. And there's OTE of that displacement. Let's go dark to light like this. So rejection block darkest, then this, next darkest, and then this. Yeah, y'all see it yet? So now hopefully this is making sense with what I've been saying this whole time. From the rejection block to the fair value gap at OTE, and then to the breaker and fair value gap, and then we terminate at whatever this is. I just think that is very fascinating, you know. And this will repeat in the market over and over and over. That's the part that's cool. Is this isn't just like, you know, once or twice. This is every day. This happens. Okay, I'm done here. I kind of have to use the bathroom. I'll be right back. And then I swear we'll look at something else that's not this. Hey, what up, Reaper? Reaper FPG. Highest amount of money you've made in a single day? It's a great question. I've hit, I've hit a 7R, right? I don't know. I'm pretty sure I've hit a 7R. I can't remember. But the thing about highest amount of money is it's about how much you risk, right? If I risked $1,000, hit a 7R, I'd make 7,000. But as well, that same 7R, if I risked $100,000, I would make $700,000 from the exact same trade. So, um, in trading, how much money you make actually doesn't represent literally anything about skill. It's about consistency, risk management, and showing up. Okay, there you go. Number 2. Okay, I do have to use the bathroom, guys. I'll be right back. But y'all can stare at this beautiful thing here. Wow. All right. What do we look at next? Also, I saw there's 8 people watching. That's crazy. How many hours do you spend on TradingView learning? How many backtests do you recommend for beginner per time and day? Great questions. It's all up to your personal preference. I mean, you could say the same thing about any skill you want to build. It's about how much better you want to get and how fast. If you spend more time, you're going to get better a lot faster. Probably, though, most people don't have a ton of time to go through hours and hours every single day. I think the most reasonable thing for a person to do is spend an hour a day at night reviewing the market. Look at what happened. What trades do you see? Not trades that I see, not trades that ICT says that you should have seen, not trades that Dodgy says you should have seen. What trades did you see that make sense to you according to the concepts you know? And then do that over and over and over and over again. About probably like 1 hour a day is fine, or less. You don't even need that long. Just as much as you want, right? But doing that time and time again after day, you're going to learn a lot. You really will. All right, what should we look at now? We looked at the longs. We looked at the shorts. I think we should see if there was something else up here, because I'm pretty sure there was. Even though I did get off the charts. We could also look at first within for value gaps. Let's do that first. Yeah, look how the market interacts with this one. I could review London stuff, like London trades, but I don't know. I don't really feel like it. I'll look up here, see if there was anything. And then if there wasn't, I might wrap things up soon, honestly. But the cool thing about when you're getting this much displacement, guys, the thing about this is all the low time frame gaps typically hold. Like 5-minute gaps, let me make a note of this, right? If you ever see this much displacement, all the low time frame gaps typically hold until the draw on liquidity is hit, right? Basically, every little gap that forms gets bought up as fast as possible when we get displacement. Because think about it, when we get this much displacement, you kind of have to ask yourself, like why? Like, what is the reason? In this case, we were wanting to rebalance to, it looks like this data high or high of week or whatever you want to call it. I am curious if there was any other draws in liquidity, like previous day's high, and there's also previous week's high. Both of those, actually I'd say previous day's high might even be the more logical draw in liquidity, because we had a previous day's low SMT. I actually like that. So previous day's high was the most logical draw in liquidity, assuming that you knew that, right? You can go in here within this price leg and look for all the low time frame gaps and then take change in state up to previous day's high. Once again, every single low time frame gap, when we're getting this much displacement, these low time frame gaps will hold even on the 1-minute chart, which is crazy, right? And why did I think we were gonna get a previous day's high? Why was previous day high a good draw on liquidity? Because we got previous day's low SMT. So, and I'm gonna put in parentheses, what is a previous day's low SMT? It's also a time-based SMT. So anytime you have SMT with a previous week's low, a previous day's low, a previous session low, a previous 90-minute low, it's time-based SMT. And that's what's referred to as sequential SMT. So higher probability SMTs, once again, that was right here. So we know with this previous day's low SMT, we know that now the most logical target is now previous day's high. Bang. So I'll show you guys how you could use this logic to take probably a couple trades within this. And then I'll probably wrap things up because I don't know. There's not a ton more to talk about besides London, and I don't know. I don't really want to review London in depth. I'll probably just save that for the weekend. Okay. So yeah, we have a 5-minute gap here, right? So 5-minute gap. This is two different trades in one here. So with the 5-minute, we drop down to a 30-second chart. We have one 30-second market maker buy model here up to this high. So there you go. So 30-second change in state. Let's actually measure this out here. So this one does not go all the way up to the terminus. It just goes up to here. But the better one, I don't even want to look at that one. The better one happens right here. When I see this, light bulbs go off. This is nice. This is the one I'm going to look at. And you can clearly see there's accumulation, manipulation, distribution. A couple of things we should look at, right? True opens. So what's the true open of around this time? Usually we look at, 90 minute. Okay, so that one's not helpful. So what comes before that? This one's not super helpful either. Okay, I'm not gonna go down to the 22-minute true opens. I don't want to touch them. But, or actually, you know what? Fine, I'm gonna do it. Right. There you go. And then we probably had SMT. If I had to guess, we probably almost certainly had some kind of SMT here. Right? No way we didn't. No way we didn't have SMT. My mind would be blown if we did not have SMT. At least of some sort. Yeah. I mean, there you go. You know, what's interesting, we actually had SMT before that, but then this is the one that held. Anyway. It's also time-based SMT on the 22-minute. Okay. So now you start to see what I'm saying, right? We have the higher time frame drawn liquidity, which is previous day's high, right? That's our target. Now we have a low time frame SMT here. Once again, so much of trading is understanding that narrative. Like, I know if we got previous day low SMT, we are probably going to go to previous day's high. That is something that comes from screen time. You can't cheat that. There's no cheat code to this. Alright, there you go. Accumulation, manipulation, and then distribution. There you go. And that right there wraps up that trade. Whoops. Well, that's not what I wanted to do. Alright. Kind of takes a little bit of conviction, though, to hold it all the way up there. Let's see if there's new to opening gap or anything like that. Not really. For that gap, not really. So, yeah. Try not to go against the trend in situations like this, you know? I mean, that's something I need to work on too, but... Whoops. And then we can project this out. So I'd go like this. Bang. And, well, what a surprise. It's around 4 to 5 projections of the OB. Okay. Most easy, reasonable target, by the way, guys, is just targeting here. But previous day high works too. I'm gonna just target 2 projections, and then kind of show how, you know, you could have targeted further. All right, I think I'm gonna wrap things up here because I just kind of want to be done. It's enough back testing for one day. And then I'll make the market recap in just a second, and then, yeah, that'll be it for me, so. $10.48. Flow state, 5 minute, 30 second. There you go, perfect. And it was also at the macro too, which is kind of cool. Okay, I think that wraps things up here. Dang, that was actually a perfect macro trade. That's crazy. Okay, that's worth taking another screenshot. Hold up. Look at that, 1050 right there, 1050. And we are drawing liquidity. Right at 11:10. Like that's nuts, guys. You can't tell me that's random. That's just crazy. No way. No way. No. No, 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 no. That ain't random, folks. Okay. Perfect. Okay, guys. Hopefully you guys enjoyed. Sorry it couldn't be longer, but you know what? I want to be more consistent from now on and try and make sure I actually show up every single day, do the back testing, show up to live trading, get the videos done, and so that might mean shorter streams, and that's fine. I actually don't think the stream was that short, in all honesty, but thank you guys so much for watching, and I will